Okay, so we're starting?
Kraken, eToro, Huobi, Gemini. I mean, these are the biggest names in the Bitfury, Ledger, Prime Trust, Deribit, Animoca, Yuga Labs. I mean,
so why isn't the Financial Times, the Journal, the New York, why don't they report about all this activity? I don't know what it is. Maybe it's human nature.
Yeah, hash rate makes all-time high after all-time high after all-time high.
It's 500 to 700 billion of total value now in the space.
But doesn't that now mean YOLO?
I love the stablecoin business.
No, I'm just kidding. Just kidding, everyone. I spoke with Dan Tapiero almost exactly a year ago, and he talked about the crypto space 30xing. Now, that was from an original 300 billion going all the way up to 10 trillion. His belief that it could have a market cap or total value of 10 trillion is so fundamental in his mind that he named his company fund 10T. Well, now he thinks that maybe 10 trillion is a bit too bearish. We talked about everything under the sun. One of my favorite guests to talk to. You guys really don't want to miss this one.
Let's go.
I guess the most important question on everyone's mind right now is, do you trust your bank?
Okay, so we're starting? We trust your bank? Look, yeah. I think, you know, as you know, I have a sort of this deep macro background, and I was 25 years in the macro hedge fund business, and you know, banking crises all around the world is something that, you know, we always were involved with one way or the other. As far as banking crises go, I mean, this is not that severe just yet. Credit Suisse, if you look at a price chart, has been going down for literally, I mean, 10 years. I think it was zeroed out in most equity investors' minds many, many years ago. So, you know, regarding the US, I mean, look, it sort of reminded me a little bit of 1994 when Orange County took a wrong bet and got blown out. And, you know, I think that was a very clear, like, portfolio mismanagement situation. And this is what we had. I mean, I don't know how the Fed, I'm sure they were aware, but I don't know how they could possibly not be aware that you would have a whole group of not just banks, but insurance companies, pension funds, et cetera, not get caught in a long duration bet. And again, most of those entities don't have to liquidate. There's no forced liquidation. So in the case of Silicon Valley Bank, they were forced to liquidate. And why they bought the 10-year when, you know, the 3-month was pretty much the same thing in terms of yield. It's just poor, you know, poor money management. But you know what? I don't know how the Fed or anyone else expects local banks out in the middle of the country to act as hedge fund managers, you know, and to act as, you know, to be so right on their interest rate forecast. I mean, it's very difficult. And so in a way, they were acting like a hedge fund. And that's pretty darn irresponsible for what I would call, you know, like not a local bank, but like a non-trading focused bank, right?
Right. I giggle because you said obviously you don't know how they can be expected to behave like a hedge fund. The Fed also has no idea where interest rates are going to be. I mean, you said that these small banks, it's hard for them to predict and make these bets. You could also argue that the Fed dot plot is, you know, miserably mismanaged, generally wrong, and they also miss.
Yeah, that's a whole separate point. I mean, I think the peak in the rate cycle has happened. Sure. I think growth and inflation are going to be lower every quarter into the end of the year. And I think it's likely, I was a little early in this call. I was on Twitter talking about this probably in May and June last year at the very peak. I just think inflation will likely, CPI will likely be below 4, I think, by the end of the year. And that's what's really, to me, going to be a big boost for assets. Is that what is the surprise? The surprise is that they've over tightened, and obviously there's so many signs of it. It's like, I don't know, Scott, what you think, but it's pretty much the most obvious cycle that I've seen, at least in 30 years, right?
But
I mean,
but the Fed continued to hike, right? I
they
mean, the most recent
continued to
reason
hike.
they continued to hike, and solely because seemingly, I don't know. I know that Powell is smart, and I know that all the Fed governors are intelligent people. I don't doubt that. But it seems like they only look at CPI and nothing else matters. And every leading or forward-looking indicator says that inflation's already crashing. If you look at commodities, basically everything. And they seem to be working on lagging indicators of hikes that they did 6 months ago, waiting to see, them come to fruition. It just seems like they're completely incompetent, even though I know they are intelligent.
Yeah, it's definitely a weird one, because they even know that policy works with a lag. I mean, that used to be part of their mantra. So, but they made a mistake in not starting the tightening soon enough, right? I mean, we've all heard this story a million times, and then they overcompensated at the peak. And, they completely turned and got very aggressive, really at the peak of the CPI. So, I've never seen a central bank make its policy on the two most lagging indicators, CPI and unemployment rate. But the yield curve is super inverted, and I think, tells us what the market is saying. And the Fed is aware of what the market is saying. So, look, they only have that very short interest rate, the overnight Fed funds, to try to manage an entire cycle, not just the US, but really also the global cycle. I have some sympathy, but not really, because it's pretty obvious things are going to downshift pretty hard over the next 6 to 9 months. And we're seeing it already. So I don't really understand why you need to make sure that people get fired to manage a liquidity cycle, right? Like,
they could break everything in their path, but if they don't break employment, they don't care.
Right. It's strange. Take down every bank out there. I mean, there would have been, if they hadn't come in, there would have been a massive run, and there would have been a lot of bank failures. And, they just came in and backstopped the whole thing. And I don't know, in my mind, that was it. That every crisis like that is always the end of a tightening cycle. So I don't see any more tightening. I think that you're going to get a massively inverted yield curve. Maybe, I see 10 years down, probably certainly below 3% this year, maybe even down to 2.5%, et cetera, regardless of what they do with the Fed funds rate.
I agree 100%. You mentioned maybe the most important point, which is if the Fed or if the FDIC, if the government treasury had not stepped in and backstopped everything, we would have had a massive run on banks and would have had a massive bank failure. But to do that, they effectively violated decades or hundreds of years of central bank policy. Every sort of policy they had put in place after the last financial crisis, it seemed like overnight, they just decided all that was out the window and this is what they were going to do. So the question then becomes, did they solve it, or is it temporary? If I get that they can backstop 2 banks, 3 banks, 5 banks, 10 banks. If we see another trigger for a bank run, can they backstop 20 banks, 30 banks, 50 banks?
I sort of think that they kind of have. They've basically,
they probably quietly are.
Yeah. It feels to me like, that's what they've done is, they've backstopped all the deposits in the system somehow. And one would think that if that's the case, that you've increased the supply of liquidity dramatically, and potential liquidity, right? And potential liquidity, to me, it's obvious fodder for a bear market in the dollar. And, I think the high in the dollar has happened. And I think we're going to have a nice little bear phase here. And it's playing out. It's playing out because, again, I said potential liquidity addition. So if we have more bank failures, there'll be more. And that probably pushes the dollar down a little more, probably, pushes down the rates in the back end. and I think pushes up equity. I think we're going to have a very strong year in the equity market this year.
I agree.
It's a wall of worry type thing. People say, well, how can the equity market go up before the recession is even hit, before growth and inflation have even dropped? And it's because liquidity is the powerful arbiter here. When you look at the stock market versus money supply on a very long-term chart, it's basically not gone anywhere, right?
Yeah.
I mean, right? Isn't that it?
Yeah, it is. So it begs the question then, would you consider what's happening that backstops this form of liquidity as QE?
Yeah. I mean, absolutely, it's QE. They don't have to call it that.
Well, they'll never call it that. And a lot of pundits refuse to call it that. And I keep saying QE infinity and I get, shots from every side, it seems.
Yeah, I don't know, pretty clear. Maybe they're hesitant only because it's the backstop is liquidity, extra liquidity today, but also potential liquidity to backstop things in the future, which in a way is almost more powerful to me.
Yeah.
Because it's they really have taken away, the downside possibility for, banks that make mistakes. I mean, like, my goodness, if I were in a business where I didn't get penalized for my mistakes, I mean, that's the greatest business in the world, right? I mean,
aren't they going to push banks further down the risk curve? I mean, you talked about the fact that they effectively have to behave like hedge funds. And I would argue that the Fed has forced that behavior by Dodd-Frank and the policy of what they are and are not allowed to hold. But doesn't that now mean YOLO? Right? The bank can do whatever they want. They're going to be backstopped.
They probably add some another regulatory layer. So it's theoretically YOLO if the regulator is napping. But what I would say also is, and this is interesting, plays into Bitcoin and crypto a little bit, which is that you sort of degrade the quality of those businesses, those banks as businesses, and investors, I think potentially start to move away from wanting to own equity in those companies because they're not I would say quasi-nationalized, but they become sort of non-corporate, non-capitalist entities. And it's very possible that instead of YOLO, they clamp down because they're backstopped by the government. And then all of a sudden, their ability to make return completely collapses. And so when we always talk about the TradFi banking system is going to go away, and what I call the digital asset ecosystem, which is everything in the new world, it's just going to replace it. I never saw it that way. I always saw it sort of as a merging of the two. But you can envision a world now where, because the TradFi banking system is, let's say, impaired from the money-making process, that people do move in to the digital asset ecosystem, right? And I mean investors, like they start to see that there are great businesses in the space. There are ways to make money in, I mean, I wouldn't call it new banking, but just in our new world, right?
And when we saw the banking collapse, we saw Bitcoin rise, right? Exactly. It was effectively between 19,000, 20,000. Now, some will argue it didn't rise until the Fed announced the backstop and we knew that there was going to be liquidity. And once again, liquidity trumps all. And Bitcoin certainly has followed liquidity in the past as well. But it shot up to effectively just south of $30,000 in that week after. What do you make of that move, right? I've asked a few people this. I asked Michael Saylor this on Spaces. He curiously, I would have expected him as sort of a Bitcoin maximalist to say it's all happening. But what he said was, I think that a bunch of people in crypto moved into Bitcoin, right? They moved out of their altcoins, they moved into Bitcoin, but I don't see a mainstream push yet into Bitcoin. Do you think that was real adoption? Holy crap, banks are collapsing. I need to buy Bitcoin.
I do, because also remember, Ethereum also rallied. And so I sort of see Bitcoin and Ethereum as together as very high quality collateral that can't be debased. And we
Right.
know actually now Ethereum has a burn schedule. So supply is being reduced. But let's put that to the side. I mean, Bitcoin and Ethereum, even more perfectly than equity, right? Because the supply is limited, respond to these shifts in liquidity. But you also had some of the, what I call venture projects or the other protocols also improve in price. Like the whole space improved in price. And so I don't think it was, there was obviously some, Saylor, I think, is right in saying some of the money into Bitcoin came from within the ecosystem, but I think a lot of it also came from without, from outside of the ecosystem, just because, it does act a little bit like gold. Bitcoin and gold do have sort of a trading market connection. I know Saylor watches the markets, but, he's a technologist. He comes from, the tech background and maybe doesn't watch the correlations and the way the market is trading as much as other people. I mean, certainly me. And you see Bitcoin trading with gold and liquidity and 2-year and 10-year notes and, NASDAQ. I mean, it doesn't always, and it certainly outperform absolutely every single thing, because even the NASDAQ, any of those companies can increase the supply of their stock, almost, not whenever they want, but they can. And Bitcoin and Ethereum to a great degree cannot. And so I thought, and I was doing investor meetings during this time, and people were like really excited that this was the Bitcoin use case, or the high quality collateral use case, was being proven out. Like everyone who was an owner wanted to see this action on this banking mess. And I'll tell you,
about time.
And you got it. Like we got it. I mean, it's up what, 50 to 60, 70%.
I think it's almost 70% on the year. Yeah. Depending on the day.
It's right. It just, so it, all these people complaining Bitcoin doesn't respond to this or that. It's not a hedge. It's not, whatever it is, it did exactly as it was supposed to do. And I think the low for the space came in, on the FTX collapse. The
100%.
It's very obvious to me that, when Ethereum couldn't make a new low on the announcement of the FTX,
it didn't even come close.
It did.
It was a few $100s above. Yeah.
And Bitcoin made a sharp move lower and then came back. And, we know from the traditional markets that that's just a bullish divergence when you get the worst possible news you could ever imagine. And I think that was certainly the most surprising for, 95% of the people in the space, that if the price of the most liquid asset can't even go down, I mean, that is clear that the selling is just finished. And so I actually was very aggressive in our fund 3, and I put over $100 million to work in 7 different companies in the space, crypto blockchain businesses in the space, in that October to December period, because, again, I'm probably one of the few private equity guys out there that actually feels like I need to time the cycle. Most private equity guys, they want to invest throughout the cycle because they don't know when there's a low. I'm pretty darn sure that was it.
I argued over and over again that last summer was the low, and then Sam got me. But I believe that even if you look at the Bitcoin halving cycle, the 4-year cycle, that summer low, when Bitcoin then sort of just had a boring, choppy sideways summer, I think that 17-ish would have been the low. Sam gave us a better entry, obviously. Yeah. But the very fact, as you mentioned, that entire FTX drop was retraced by January. We were back at 21,000 in 2 months when FTX was apparently going to, torpedo the entire industry.
Yeah. And then Genesis as well, DCG's Genesis, people were saying,
move on that.
Oh, I can't buy because what if that Genesis goes bankrupt? Anyway, they announced bankruptcy. I think they did, right? They announced bankruptcy. And on that day,
price went
exploded. Remember that? I mean,
that's the wall of worry, right? I mean, when bad news ceases to be bad news, I think that's a very clear indication that the bottom is likely in. And to your point, at 20, 28, 30, 26, wherever we are when this podcast comes out, pretty hard to imagine there being enough supply even left to tank price back to the lows. I mean, what would it take for price to drop 50%? The US government is selling Silk Road Bitcoins 10,000 at a time, and the market didn't even react or know.
I agree. I mean, it's from a trader, like if you would ask like a trader's perspective on this, you would say it's trading really well.
Right.
I mean, it's trading really well. It doesn't like, so even overnight, we had, the Saudis increase oil output and everyone's like, oh, oil's exploding up now. And now inflation is going to go up and the stock market, they're selling NASDAQ. And so they'd sold some Bitcoin or some, overnight, and then it popped right back. Like, I mean, these very small, like little trading things are all showing that it's trading really well. And I don't focus too much on this, but I'm aware of it because, you like to get confirmation, right? Your confirmation that the low is in, right? They're trying to sell it, and it holds very well. So
you actually you retweeted somebody just a few days ago who said that when the S&P gains over 7% in Q1, 16 out of 16 times in history, the full year finishes green and up 23% on average. So I know that this time is different is a very tempting thing to say, but we did it. So we would have to be 16 out of 17 for us not to end this year green, even on stocks.
Yeah, I think, that guy does tremendous work. And some people in the comments were saying, oh, he tweaked the data, this, that, the other thing. Look, it's close enough for government work, as they used to say. I really think that stat is just incredible. I mean, I think there's a very high, degree of probability that we end up nicely this year. And it's one of the most classic wall of worry years that I've seen. And I would connect that to crypto and Bitcoin too, because I keep getting, it's just relentless, this FUD about how the US regulatory authorities are going to shut it down, and there are no fiat on ramps, and it's a choke point, this and that. And I'm just like, guys, the thing is trading like it's bulletproof. I mean, I've been hearing this FUD stuff. I mean, it's 5 years that it was going to get banned and this and that. Then China banned it, and
now China's back.
Had no impact.
Now China's back.
And now they're back through Hong Kong. And so I don't know what it is. Maybe it's human nature, just wants to find, the weak spot or the focus on the one negative thing. But I don't know. It looks like if you could get CPI, down below 5 in the next 6 months, I mean, I hate to, but I mean, Bitcoin could be at 40,000. I mean,
I think so. I think
I don't want to trade it like that. I don't want to talk like that. But I mean, honestly, it's just this inflation premium thing that's got people a little worried.
How many times in your career in crypto have you heard the over concern about a China ban, an India ban, ESG energy narrative, or hey, even recently, Mt. Gox creditors getting their Bitcoin back and dumping it on the market? None of these things ever happen, and we repeat them every single time. Now, China did ban crypto, but I'm saying none of them end the market in the way that people seem to expect.
Yeah, maybe they're happening, but just the market's absorbing the news incredibly well. This is one thing, there's so many people in the space who've not been portfolio managers, who've not been traders. I mean, I'm looking at price action for 25 years. When things are trading well, when they're trading poorly. How is that defined? It's a little bit nebulous, but it's very easy. If a lot of negative news is coming out and the market's not going down, that's trading well. And, that tells you that this is an early bull phase. And again, I think we could go sideways a little bit this year.
Yeah, I agree.
But I think in the second half 24, which is post that halving, and into 25, we're making new highs, and I would suspect well over 100,000 on Bitcoin. And
Yeah,
I
we're
don't
well
think
aligned.
that's a very aggressive call either.
I think, I think the exact same thing. I've said a few times, if you just look at a Bitcoin, a monthly chart historically or a weekly chart and just draw the halvings and the bottoms on it, you could have literally fallen asleep or been hit on the head by a rock and missed everything happening in the world and turn on price action right now and say, oh, we're just right in the perfect spot of the cycle. Yeah. We'll have the halving in May. We'll chop until then. 6 months after the halving, we'll blast off.
Right. Right. I mean, I think that's right. But look, it's hard to do it. Like we're talking about it sort of in a casual way, but it's hard to hold for the long term. It's hard to ignore all the zigs and zags and all the news and all the FUD. And like Twitter today or yesterday was all about Elizabeth Warren saying something on Bitcoin. I mean, I don't know who is possibly more irrelevant than Elizabeth Warren, except for
she's never passed a bill.
Frank. People wheeled out Barney Frank a few weeks ago. And I'm thinking, Barney Frank for this, choke that. It's all just FUD, right?
So do you think that there's any truth then to a coordinated effort to cut it off? I mean, it is a bit suspect that effectively Silvergate, Silicon Valley, and Signature were the three banks that were primarily servicing the crypto industry. And they're the three and Signature Bank was quietly closed on a Sunday.
Look, I guess it's possible, but I mean, I look at the market and the market's response, and you know what? I look at the value of the dollar value that's within the entire, I call it again, digital asset ecosystem. So the value of all the cryptocurrency that exists is 1.1 trillion. And the value of all the equity, roughly the businesses in the space, is, let's call it, 500-600 billion. So you're looking now at a space that has $1.7 trillion of total value in it. Okay. And it was 300 billion in the middle of 19. So here we are 4 years later, we're up almost 6 times. Think about how much stuff was thrown at this space. Okay. Crazy. There in the last year, but over that period, all that negativity, all of that. Again, I'm a long-term macro guy. I sit back, I look at the big numbers, and 1 point, yes, at the high, that number was 3.5 trillion like a year ago, but we're $1.7 trillion between the money that's involved in like NFTs and DeFi and stable coins, even the layer twos on Bitcoin, our people are getting excited about. And we've got Lightning and now Ordinals, and there are all these different new things popping up and these use cases. I mean, I read the other day, I don't know if you saw this, the state of California is going to put your license and your car deed title on the Tezos blockchain. Now, I don't know why they chose specifically Tezos, but I mean, look, that's pretty mind-boggling that a non-corporate, clearly not an economic agent, right, is embedding a blockchain into its, in quotes, business model, right?
I mean, Starbucks, right? I mean, Starbucks rewards programs. It's all very quiet, but we can ignore the price of coins and whether they need them or not, but the technology is unstoppable.
Yeah, and what the traditional world is now really, I think leaning into it. You mentioned, you mentioned Starbucks, but even like the big guys, Google, Apple, and then you have all these like interesting NFT use cases. And I know the Bitcoin guys think it's a big waste or whatever it is, but the reality is that it's being integrated in one form or another. These companies are realizing they can build community, they can reach their clients better, they can build that relationship through NFT drops and ownership, and have a tighter connection with their consumer. And so the car companies have done a bunch of things with it. I just, it's not like 18 and 19, where I felt like in 18 and 19, it was hangover from the ICO. So people ripped people off, which is a terrible thing. Bad actors in the space getting involved with all these ICOs. They plugged all of these retail people. And it was just then about the price of of those coins, right? But today, it's like you still have what the dollar value settled with stable coins is, I think, $8 trillion last year. The number of the monthly active addresses for layer 1 blockchains just hit an all-time high. If you're looking at, Avalanche and Solana, Polygon, ETH, Binance Coin, that's an all-time high. That's usage, right? So in 1819, if you remember Q4 18, Q1 19, like it was like diabolical. People were, they were on the ledge. And today, and then I got this other stat here, number of developers that have now work in the blockchain ecosystem, all-time high in 22. So the price went down 70, 80%, but the activity and interest in the space overall is at an all-time high. So why isn't the Financial Times, the Journal, the New York, why don't they report about all this activity? All they're doing is, they report about Sam Bankman-Fried stuff, or they report about, all the regulatory stuff. It's just incredible.
And hash rate continues to make hash rate makes all-time high after all-time high after all-time high after all-time high. So you said big numbers. Speaking of a big number, you threw out 100 million and said that you were able to deploy that between October and December of last year in the midst of the FTX collapse. That's a pretty big number in the crypto space, especially when most of these companies have relatively small market caps. It's hard for investors to get their money in. Well, so what are you excited about, and what are you actually investing in, and what were you investing in sort of at the depths there?
Yeah, well, I mean, I would say they actually don't have as small a market cap as you think, even if they're discounted from the low. And I always pull out this stat: in the middle of 2019, there were only 14 companies in the world in the crypto blockchain space that had a valuation of over $1 billion.
Oh,
and today, that's 14. And today, based on my account, there are over 100. And at the peak, there were 150. So if you look at, and we have a universe, this is my fund 10T, but the new iteration is called 1RT, One Roundtable Partners. Our assessment is that there are 223 companies with a valuation of over $100 million.
So easy to get 100 million in.
Yeah. And so I think it's 500 to 700 billion of total value now in the space. And, we led one round for QuickNode, which is API and node infrastructure. They're basically the only competitor for Alchemy. We led that and invested. Actually, it's going to be close to 50 million there. We also invested in the secondary. We're very active in the secondary, and there were some companies. And again, I'm not supposed to mention them for some reason, but there were companies that we were. I mean, our legal team's like, Dan, no,
I know how it works.
Mention, whatever it is. But I will tell you, we bought 4 different businesses at between 40 to 80% discounts from the previous round. So and these are businesses that we like, that have been on our radar for a while. And there were people selling in the secondary who either wanted cash, needed cash, were in for a long time and wanted out. So we were able to, procure these blocks. We're very active in the secondary market. And so we bought from another fund, we bought from a seed investor. It's that kind of thing. And people come to us because, look, we've deployed $1.2 billion in the last 2 years, and we now purchased 26 different businesses. And so, and you can see them on our website, on the 10T website, what they are. And I think that's the story. The story is that this is a thriving, growing ecosystem. And Yes, there are some bad guys out there. We passed on over 100 companies last year. Thankfully, we passed on FTX and we passed on, BlockFi and Celsius, thank goodness, and some of these super high valuation companies. But right now, it's never been, this is why we're raising another fund right now, because the opportunity set has never been as big. And the valuations as reasonable, because a lot of the sort of traditional private equity guys that came into the space last year and the year before, they've now moved out. And so as far as I know, we're still the only growth equity fund in the world that exclusively focuses on crypto and blockchain businesses. So I think now is a great time, to buy. And it does correlate a little bit with Bitcoin and Ethereum prices. But look, we have investors that legally aren't allowed to own cryptocurrency. So for them, we're a great exposure. The businesses that are a little more developed, it's not venture. I don't think we have as much upside as like a venture investment would.
But nothing you're investing in is going to zero either.
Right. Nothing we have. Well, actually, we had 1 out of the 26, unfortunately, that we think is impaired. But that's not the end of the world. It was only 2.5% of the total assets. I'm going to make a mistake every once in a while. But I'm still shocked that we're the only guys out there investing in this space. I think it'll change. But so we kind of had our pick in that October-December period. And we put, as I said, we put over 100 million to work, and that was the end of our third fund. So
yeah,
anyway.
I'm looking at your investments, Fund 1 and 2, Kraken, eToro, Huobi, Gemini. These are the biggest names in the Bitfury, Ledger, Prime Trust, Deribit, Animoca, Yuga Labs.
Right.
You've got the big ones. I see Babel there. I'm assuming that might be the one.
Yes, that's the one. Thanks for
you kept it on the site.
Yeah, I made a mistake there.
I'm like FTX, Celsius. What? No, I'm just kidding.
Everyone. Funny.
So that said, as we continue through this sort of, I guess, down cycle with these down rounds, what's exciting you about what's still being built? It's very clear that you have a picks and shovels approach. You're invested heavily here in the infrastructure. And that's where those investors you talked about who probably can't get exposure anyways, where they want to be, right?
There's so much going on. For instance, I love the stablecoin business. I think that
Tether made $700 million this quarter.
What's that?
Tether made $700 million in the first quarter. Yay, interest rates.
And I think Circle did giant numbers as well, and they did huge numbers last year. And that's a company that's really run by first-rate CEO. He's pivoted a few times in his career. I mentioned before how much was settled in stable coins this year. It's trillions of dollars. And basically there's only one player. Tether is hard for a guy like me to invest in.
Of course.
But Circle, I think, is a phenomenal business. And I only see that, that business exploding. And really, honestly, there should be more than one stablecoin provider legitimate in the entire world. And I suspect within the next sort of 5 years, you'll see others. And, one of the things we're doing in the new fund is we're going to be focused on helping shepherd some of our companies towards realizations, either, M&A or IPOs. And I just put this one thought in your head, like there's one large crypto, blockchain business in the world that is public. That's it. It's Coinbase. There's one. In 5 years from now, there is zero chance, literally zero, that there's only going to be one. And I think there are going to be tons of them. And right now, this mid-stage, again, you have a huge number of people in the venture with, Andreessen and Polychain and Paradigm and all these guys, Pantera, all in the early stage. But I think at least for us, like it's not really a competitive environment in in this mid stage. And look, 5 years ago, there were only, or not even 4 years ago, there were only 14 companies that were over $1 billion in valuation. And now there are over 100. Like at some point you get, and this goes back to your point before, you get adoption happening as people are able to buy equity in businesses that are producing revenue. And I think that, you know, revenue in the VC space is maybe a bit of a novel concept, but the space that we're in really sits somewhere between PE and VC, right? Like, because the PE guys, I think of anything touching crypto as VC, but in reality, that's not really true. There are some really solid businesses here. And we have, last thing I would say is we have 5 or 6 businesses that actually made more money in 22 than in 21. So you
I bet
can
Ledger's
imagine,
one of them.
What's
Is Ledger one of them? Because we saw this.
Ledger is flat to up. I would say you have to, if you look at the currency.
The prop, right. Yeah. I was going to say the move towards self-custody that I think we've seen sort of happening was post FTX. So it would have had to have happened at the very end of the year. So yeah, I would be surprised if they're massively up. How excited are you about their new wallet?
Oh my goodness. That was one of the original reasons we invested in April, May of 21, was because they had this prototype built. And I thought, that's the coolest thing ever. Are we going to actually get awesome. That? And we are. I wish there were more guys out there who could help us produce them, because I think they've pre-sold their max amount that could be pre-sold. Like I'm just hoping that we can find a producer out there who can get us to the, to have more capacity for us, because I think demand is off the charts. And look, it's going to be sort of the wallet that we all kind of wanted, like on our phone, and have a lot of flexibility, have that screen. So I'm just thrilled. And they
thing looks awesome.
Yeah. Did you pre-order one?
I didn't pre-order one because I'm a moron, but okay. I will be on the next list for sure. Yeah. I kind of saw the news and I was like, it looks amazing. And then I realized that you couldn't get them anymore. Right. But I'll find a way. Don't worry. I know some, I know some people, but I will definitely get my hands on one. Is there anything in this wall of worry, anything with the regulation, anything with the banks that's concerning to you to any great degree? Because I think it's easy to be dismissive of it, but I mean, there is really a major pushback against our industry.
I know. I mean, look, I would say, there's always something out there, I guess, but I'm not as interested in what's actually out there. I'm more interested in what the impact is of what's out there will be on the market. So I'm a market guy. I'm not like a journalist. I'm not like a statistician or a historian. I'm not any of that. I'm a market guy. And so I only care about a fundamental piece of news if I think it's going to impact the market.
Long term.
Well, long term. I mean, let's just say for the course of the year.
Yeah.
I don't think there's any piece of news that I could envision that will not have Bitcoin and Ethereum closing higher in price by the end of the year than it is today. Anything by the end of the year. Now that doesn't.
I tend to agree, but people are obviously terrified about the Wells notice to Coinbase. In a worst case scenario, if Coinbase, could only offer Bitcoin like Coin and Ethereum or something like that, and obviously the CFTC's action against CZ, but people need to remember that the Coinbase hasn't actually been charged with anything, and CZ's court right now is completely civil. I mean, the Binance case right now it's civil for now.
I mean, they have been going after CZ for so long. I mean, that's almost as old as Tether FUD, or it's almost as old. It's not quite as old as when the Mt. Gox,
the Mt. Gox
become available, right?
It's my favorite. Yeah.
So I mean, I'm not dismissive just because I'm bullish. I'm dismissive because I see how the market has reacted, right? I've seen the price action. Look, there is no piece of information or data that we're going to get that will be more shocking than Sam Bankman-Fried going from $20 billion worth and the wunderkind of the entire space to being fraud and bankrupt in this period of a month. We're not going to get anything worse than that, okay? And even that, when that happened, Ethereum couldn't make a new low in price. And look, Coinbase, let's just talk about that for just 1 second. The market cap of Coinbase is around $15 billion, okay? The space swings around more than $15 billion in a day. So again, I look at this broader metric, this digital asset ecosystem value, sitting at $1.7 trillion. 15 billion. If Coinbase went to zero tomorrow, it's unfortunate. I don't expect that in any way, shape, or form. But that's $15 billion. Like, so what? Like, it's not, I had the same response. I was speaking at London 2049 after the SBF fraud the day after. And I said, listen, what's the total value that could be lost here? 10 billion, 15 billion? And it's going to be less than that. I'm like, look at how big the space is. This isn't just about, one story. There are literally hundreds of stories in the space now. I mean, as I said, if you've got the California DMV engaged with it, just imagine all of the economic actors, all of the corporate people. This is, every luxury brand is talking about what their, NFT and metaverse strategy should be. Every payments business is thinking about it. I was just in Australia. The largest banks there are thinking about, how to, they're really thinking a lot about like tokenizing assets, which is another thing that hasn't even started, which we all know is, at some point is going to take off. And one of our companies, Figure, is very focused on that. So, I mean, this is just a whole, again, I call it this digital asset ecosystem because I need like a phrase to describe something so big, right? And again, it is really, this is the digitization of value is what we're living through. So you're telling me that Elizabeth Warren doesn't think Bitcoin is important. That's going to stop the digitization of value. I mean, it's a joke, right?
But it is a joke. But what's sad I was shaking my head as you were talking, because what's sad to me is that that's so obvious to anyone who actually takes 5 minutes to dig into this and understand it. But as a result of that attitude, our country, the United States, that's always been ahead on technology and entrepreneurship and has been a leader, we are going to be woefully behind in this industry for years to come. Because right now, nobody is going to try to innovate here, because so anything that's being built that's going to be important for the next 5 years is being built somewhere else.
Yeah, I think it is unfortunate. I don't count the U.S. out. We sort of live on 2-year cycles, and things could change if we get a 45-year-old president, frankly, on either side. This is age oriented. It's very hard. We've got 80-year-olds running the country, and they don't have a particularly long-term view. They're not particularly tech savvy. There are places around the world where they are super enthusiastic. And actually, I was in Dubai and Abu Dhabi. Those places are making a very strong attempt to encourage crypto blockchain businesses starting up there. And there are all sorts of incentives. They think it's the future. They see it. Singapore's another hub. You have Zug in Switzerland, which is also another hub. So there are people, Australia, I think, is super advanced in their understanding. So other people around the world who are smart, I've got some investors who are really top of the line investors. They get it. It's just the U.S. legislators for the moment, haven't done enough work. And the New York Times and the Post and the FT, the Journal, they're not helping either, because those guys are sticking to a very traditional, very traditional outlook. And I look, put it this way, I think for us, I mean, selfishly, we need all those people not to get it for us to benefit. The minute everyone gets it, the opportunity, I wouldn't say is gone, but is reduced. But I think it's so early still for this opportunity. I saw some stat the other day, only 4% of the world have digital wallets, right? And that's equivalent to, in terms of like the adoption of the internet, 4% of the world had internet access in 1998. Right. So basically, it's still early and we're nowhere near any sort of massive wholesale adoption. And just look at how much stuff is going on underneath the hood, all that stuff that I mentioned before, right?
Yeah, I think I was looking it up. We spoke a year ago and you said the space will 30x, I believe, right? And I think at that time, Bitcoin was probably $30,000, $40,000, right?
Yeah, I think
so. You think we still got a 30x in us from here? You think we're looking at a 35, 40?
No, the view that I've held since the founding of the fund was that the value in the space, which in the middle of 19 was 300 billion, was going to 30x and get to 10 trillion. And that's why I called the first three funds, they were called 10T, that stood for 10 trillion. So I put my view of the growth in the space in the name of that fund. And so that was the 30x that I was referring to. A 10 trillion value on the digital asset ecosystem, based on the way I'm looking at it, puts Bitcoin between 300 and 500,000, which has kind of been where I think it's going to end up. I thought that in 19, I think that now, and again, markets get to where they are going to get to on their own program, on their own time and plan. And there's just, I think that 10 trillion is probably a little too conservative right now.
I agree.
We're at 1.5.
I was gonna say, why so low?
I know. Well, we're 1.5 today, and a year ago we were at 3.5. So I think in 10 years we'll be over 10T. But again, you don't want to, you under promise, over deliver, right? So
it's hard in this market not to look like the crazy guy when you start throwing out numbers like 10 trillion.
Right. But we got to it through some good math, and we thought about this number a lot, and I put it into the name of the fund. So I obviously, had conviction about it. Didn't come from nowhere. But I did a panel probably a year ago with Dan Moorhead and Mark Yusko, and they asked the same question: what's the value of the space, the whole digital asset space, going to be worth 10 years from now? And I think Dan said 50 trillion, and I think Mark said 30. And I was sitting there thinking that this may be the first time in my career, well, certainly in this space, where I'm the bear, where I'm the low guy. And I was originally going to say, I'm just going to say 10 trillion, but I upped it to 20. I couldn't go above that. I think
if we tokenize everything, if the tokenization of everything happens and you include that in the total value of all those assets, I mean, then you're talking about just like no ceiling.
Correct. And I do think that is going to happen. All things of value. We didn't even talk about this, but now with Chat GPT and the whole AI kicker, I think blockchain has a huge right. You're making
the two are they were born for each other. It's like should be an arranged marriage.
I know. So, and that just basically started like a few weeks ago. Literally.
It's so crazy. Right? I thought the growth of crypto is exponential, but just using Chat GPT, we are I'm a bull on AI. I'm not concerned about the overlords. I'm
Yeah,
sorry
me
if
neither.
if they hear me, but I think that the increases in productivity and the way that you'll be able to capture value using crypto integrated with it is just going to
Also
send
the
us.
ledger. I mean, look, the fact that you're going to actually be able to have it, some of these images verified and unique. And I mean, it's the images that blow me away. That
Dude,
they're
they're
so
like Trump getting
real.
arrested,
Oh
Fauci. Yeah, you choose your side. I don't care, but yeah, dude. I'm not saying it's not scary. Like how it plays into
It's
an
a lot.
election, I cannot even begin to fathom. But I do
Right.
think that as far as human productivity and innovation, I think it's the biggest innovation we've ever seen. I mean, the internet,
Yeah.
I guess, it's hard to argue. So Dan, listen, I know we're up against time. So like, I'm hoping that we will not wait a year.
Okay.
Because you're welcome back anytime.
Thank
And
you.
B, I'm hoping that we force you to call your next fund 100T.
And we're calling it one RT, one Roundtable Partners, for a bunch of reasons. But
I mean, in like 5
maybe
years.
after that, maybe after that, I don't know. We'll see.
So where can everybody follow you and keep up with you after this conversation?
Well, I mean, on Twitter, DTAP Cap, and then LinkedIn. I've actually found to be sort of a pretty good community, and
for adults, it's Twitter, not so adults.
Yeah, for adults. But thanks for having me. I enjoyed this today. This is great.
Yeah, thank you. It was funny because as I was looking back on our last conversation, I realized just looking for it to see what it was, that it was one of our highest engaged and most popular conversations we've actually ever had. So here's to this one doing the same. Yeah, you're very popular.
Let's hope.
All right, man. Well, thank you so much for taking the time. And I really would like to do this again soon.
Thanks, Scott.
Thanks, Dan.